Hello traders and welcome to another video analysis. Today is Friday 17th of September 2021. Let's take a look at the Forex calendar. As you can see, data from the UK had been released already. Retail sales without fuel had been worse than expected, minus 0.9% versus 0.5% on the positive. So there is a great miss here. And retail sales without out fuel is even worse, minus 1.2% versus 0.8 expected gain. So the data disappoint very much. There is a consumer inflation expectations data scheduled for release half past 10 for the third quarter, and the inflation expectations are 2.4%. We will see if this will be beaten by the data or not. Consumer price index and core consumer price index scheduled for release at 11 o'clock from the Eurozone, and that's about it. If we talk about the London session, during the New York session we have our University of Michigan inflation expectations scheduled for release 4 p.m. and scheduled for release at 7 p.m. we have a Barker Hughes U.S. recount, so for all of you crude oil traders. So let's take a look at the euro dollar first, and then British pound, of course. What is going on the euro dollar? As you can see, we are back inside of this channel here, the old channel that once was violated, then tested, new low was made, and please notice the fact that this is the equal low here at the level of 1.1909. Then we have a doji candlestick and then decline, and if we make a new low below 1.1666, that means we are having a consecutive lower highs and lower lows, which means this is a downtrend. So please keep an eye on 61% Fibonacci retracement, 1.1758. This retracement is the key one, because if this one is violated, then of course there is no more retracement, and we would likely go towards the next technical support, 1.1703, or even towards the lows of 20th of the August 2021. Seen at the level of 1.1666. So please keep an eye on this situation here, and of course if there's a bounce, the bulls will likely break out of this channel above 1.1909, and the target is of course this blue arrow here at the level of 1.1976, 1.1993. So the situation is very neutral right now. We need to take a look at this bounce from the 61% of the Fibonacci retracement on the euro dollar to see what is going on next. The British pound situation is very similar. As I said yesterday, we have a first confirmation of our scenario. Of course, this is a down scenario, looking for lows of the 20th of the July 2021. We have a down candle here. If today's data will disappoint and the market reaction will be again to the downside, then we can even test 1.3731, 1.3716. This is the technical support levels here and here. So please keep an eye on this this support, because if violated, then of course our scenario is still valid and we are going lower. The other thing is that there is a bearish pressure here around the 1.3892. so without a breakout, a strong sustained breakout above this zone, we cannot assume that the higher levels like 1.4 will be ever tested. So please keep an eye on this consolidation play. It looks like the bears are making pressure on prices, and the prices might be going lower. Of course, the University of Michigan means that we need to take a look at the US dollar to the Swiss franc. As you can see here, we got our ABC pattern completed. The other one has been completed as well. Now we are making another wave to the upside. We have the wave A here, wave B as a kind of a mixed correction to the downside here, and now of course we have the potential for another wave to the upside. Currently the market is testing the highs from the beginning of the July 2021, 9,274. That's the high. We have violated this high because the today's high is 9,280, so there's like a 6 pips of violation, okay, but there is no candle close above this level yet. However, we can say that another target for the US dollar is seen at the level of 9,377, and let's just make a Fibonacci projection here to see whether maybe there will be some sort of a cluster or something like this. I think that would be okay. Well, 100% is at 9,330, so that's the strongest level, and 127% is 9,392. So really not a real cluster of prices as I wanted to be, but so far it's looking good. One more thing we can add here to our analysis is a parallel channel, and I would do it this way, something like that. As you can see, we are trading above the middle line. If we break above 9,274, very bullish signal, because this is still positive and strong momentum to the upside, and we might be attacking 9,330 as a geometrical, right, market geometry target for bulls, and 9,377 or 9,392 pips. So those are the targets for the US dollar to the Japanese to the Swiss franc. Now we are looking at the Japanese yen. What is going on here? Breakout to the downside from this supposed to be a triangle, but please keep an eye on this line. Keep an eye on this line, because we got already one false breakout with a kind of a pin bar doji candle up to the technical resistance at 110.44, rejection back under the trend line again, test of this trend line, rejection again, nice bounce from the technical support 109.08, 109.21, and then of course we are approaching the trend line here. So it's been tested many times, it's been seen by the market participants. I'm talking about this orange line here, so please keep an eye on this line, because if there's another rejection, then we can even break below 109.08, and of course that would mean the next technical support is 108.73. So very nice technical market on the US dollar to Japanese yen on a daily time frame chart. We can add one more level here. I'm talking about this lower level at 110.28. That might be useful. And please take a look at this wall of resistance here. So there is definitely some sort of a bearish pressure on the US dollar to Japanese yen. So we should be very, very careful when the market, if the market approach this wall of technical resistance. It looks like it will get another either false breakout or rejection, and then of course we will move lower towards the 109.08 and then eventually towards 108.73. And last but not least, of course, we should take a look at Bitcoin, right? The Bitcoin is recently doing very interesting things. So what do we have here? We have established a technical resistance after a bounce from $43,053. Technical resistance is somewhere around the level of 48,000, right? So this is our resistance right now. Let's just put a red line here. There you go. This is our resistance. We can of course copy that line, and the highs were made at 48,000 and $440. So this is the very, very tight zone of the resistance. But as you can see, intraday technical support 47,060 is working perfectly. Market is so far bouncing from this level, and it looks like we want to go higher. And this is confirmed by the RSI, you know, bounce from the level of the 50 points. We should see another higher high on the Bitcoin soon. So that's my analysis for the Friday. Thank you very much for watching, guys, and I hope I see you next time. So take care and bye bye.